All right. Hello, everyone. Welcome to episode 82 of Going Live with Good Soil, where Matt and I from Good Soil Investment every Tuesday at the same time, same place, which is now YouTube Live and Twitter Spaces at the same time. We're recording our kind of live stream 1 hour show, sort of going over macro markets, Tesla, Elon news, and a couple other stocks we follow. We go over any major things with that, and then we do 15 to 20 minutes of Q&A at the end. So yeah, this week, Matt, the macro market seems to be recovering. It seems to be the last, Friday, Monday, today it's flat. We keep thinking it's going to bounce, it's going to correct back down a few percent, but it's still either flat or going up. It seems like for several days consecutively now in a row. I mean, there's been a couple down days, but overall for the last like week or 2 weeks, it's been a nice rebound in the macro market. Um, it's interesting. I mean, you have some doomsdayers like Peru, who's like the Twitter guy who I follow, who's always talking about the recession isn't here yet. Stocks are going to always go down lower. And you have this Morgan Stanley guy who's like getting all over the news. I can't remember his name offhand, but he's talking about how the markets debt lows aren't in and everything. But here we are, up 2% yesterday, up 2% on Friday, I think. I mean, what's going on here? Any thoughts about what's going on with the macro market?
Yeah, I mean, my belief, and I could be wrong here, but I think it's becoming more and more obvious that inflation is dead. I mean, we were talking about this, I think last week, maybe it was 2 weeks
Yeah.
ago, and we just keep getting more and more data points. I mean, last week the news was PPI. I mean the producers purchasing index. That was expected to come in at minus 0.1% for December. It came in at minus 0.6%.
Yeah.
and producer prices are a bit of a leading indicator of what retail people are going to see, which shows up in CPI. So like the leading indicators 2 months ago were commodity prices. Those really have been trending drastically down. The leading indicator right now is PPI, and so I think 1 month, 2 months from now, we're going to see PPI or CPI, which is the big one, start to come down too. So I think more and more people are kind of giving up the inflation is sticky kind of narrative and going more towards I think a wider recognition that inflation really has been tamed, and so the Fed's going to have to change course soon. I mean, they're still talking about raising rates at the February meeting, so we'll see. But to me, it just seems more and more likely as we get more of these data points that inflation is kind of beat, and so the Fed's going to have to reverse course. I don't know. Do you think there's anything else besides inflation going on here?
Yeah. I mean, I do think it's inflation. I thought people talk about like, oh, PE historically has been this when the rate is at that, like historically the PE of the S&P has been, 17, not 20 or something when interest rates are above 5% or whatever that it is. There's like historically it's been this. But what I think goes against the grain of that kind of historic comparison is the advancement of technology, and that is
Mm-hmm.
part of the S&P now. And so companies are growing at faster rates than historically they ever have before on average. The best companies are growing the fastest, like Tesla, or Nvidia or something like that. But I think overall, because of technology, companies are able to grow profits and revenues faster with automation, less human capital needed and so forth, and have higher profit margins. And I think it warrants a higher higher overall PE on the S&P 500 in general, just with this trend of technology, increasing production and productivity of the best companies. I don't know. What do you think about that? Is like big picture kind of why this is different than the past?
Yeah, well, I think that's true, and I mean that's something 2 years ago when I had just joined the fund. That was something that you and I both believed in, that this was going to be a kind of transformative decade in terms of just the pace of technological improvement, and
Yeah.
that the capital markets didn't fully appreciate that. And so I still absolutely believe that that's true in the long term. Whether it will lift earnings in 2023 or not, I think is a fair question. But I have seen, like, it seems to be that there's a wide dispersion of opinions around how bad 2023 is going to be. Like some people are saying 80% probability of a recession. I saw some other economists, I think it was from JP Morgan, said that they only thought it was a 30% probability of a recession in 2023. And so kind of how this pans out, I think is going to have a big impact on, how the 2023 earnings are, which is like a huge part of the whole, stock price equation if you're doing it on PEs. So to me, it's like long-term, I 100% agree that this does seem to be like a very big year for AI too. I mean, the rate of improvement in AI is like really noticeably accelerating. So, if that starts to contribute towards more effective workforce and, better labor efficiency and higher earnings, which I think we're pretty close to that, then that could kind of blow away both the E part of the PE ratio for your stock price, but also you should have a higher multiple if that rate of acceleration or that rate of change is accelerating.
Yeah, I agree. I think people are more willing, institutional investors or just investors in general, may be more willing to keep their capital in equities of businesses that they think are growing at a satisfactory rate, at a good rate versus, fixed income guaranteed 5% treasury returns, for example. Like in the past, maybe 20, 30 years ago, that wouldn't have been the case. You'd put your money in like, Caterpillar or something like that, a good business, but maybe it's something that's not growing 50% year over year. Maybe it's growing 10% year over year, And so it's a little riskier to put money in that versus 5% or whatever guaranteed treasuries were back then. But now I feel like you can put your money in Tesla, which is growing between 30 and 50% a year for the next several years, and Nvidia or other great company, there's Netflix, which is still kind of people are figuring out what the heck this Netflix category is. Is it going to win the streaming wars or what? There's all these new kind of categories almost being invented. And, Microsoft now owns a big stake of OpenAI, but also Microsoft also the other businesses, Amazon, so there's all these great businesses you can own that are growing. And it's just more optionality. I don't know. It's just a different time, a different era. And I think there's too much historical comparison for the last 100 years. People are doing like every time in the last 100 years when this happened, the market always crashed after. This was no different, and I don't think that's a good mindset to have.
Yeah, I completely agree with that. And it is a weird time in the markets too, where you've got defensive stocks like utilities trading at PEs of around, 25 or so, which is right where a lot of these, high tech growth names are. And so if the tech names kind of are able to weather 2023 moderately well, I would expect that there's going to be some dispersion, between those names in terms of the PE ratios. So it's really interesting. It does seem a bit like a coiled spring. If things are not as bad as the market is kind of fearing that they could be, then we could have a pretty significant, I think, sector rotation back into growth. But you don't want to call that too early. And I think or like over 5 or 10 years, I feel very confident, calling that. But in the next 1 to 2 years, it's obviously a little harder to see how it's going to shake out.
Yeah, absolutely. The big event of today's live stream is going over the model of Tesla for their earnings, Q4 earnings per share preview. Matt has historically been pretty accurate and has done a great job modeling out the margins and all that. But before we go into that kind of detail, let's talk about the other stuff, Elon and Tesla related. I guess first let's talk Elon related, and then we'll go into Tesla stuff. So Elon related, he's in this trial in San Francisco right now. The shareholder lawsuit against him with his tweet that says, I am considering taking Tesla private at $4.20 per share, funding secured. I don't see any problem with that tweet. Like, it's crazy that it's gone this far where there's a trial. Elon is refusing to settle, and I'm reading the coverage of it from a few people. And the one guy who's covering it the most, this guy from The Verge, is clearly biased against Elon. He's like, he's putting all these jabs and digs in against Elon, trying to make Elon look like he's suspicious or like it's just frustrating when you see reporters doing that. But then there's like this KPIX, this local news channel reporter who's actually seems very fair, but he's just not as detailed, shown as many things. And I think there's like a Zoom channel you can like go into, like a court Zoom channel if you want to watch it live. I just haven't had time to really go into that. But I've been watching the tweet. Have you been following it at all, Matt, or not yet?
Yeah, I mean, I think probably not as closely as you. You know, I've seen just a couple tweets on Twitter, and I think all the usual suspects have the kind of takes you would expect. So, you know, Brad Munchin saying like, "Oh, like Elon just musked all his shareholders, and you know he's going down this time for sure." And I'm like, I don't think even if like if this suit goes against him, I really don't think the consequences are going to be that material.
I don't think so either. Yeah.
So to me, it's, you know, I kind of hope that justice prevails here. If Elon's representation of things of actually having the funding secured, which it sounds like it, like the more details we're learning about the actual commitment of the Saudis, it does seem more and more likely to me that, you know, he was acting in good faith with that tweet. Still, it's still clearly like a ill-advised tweet. I think like it's hard to argue against that. I'm sure he wishes he didn't do it, but you know, in terms of like awarding damages to shareholders, like some of the people who have been quoted by those types of reporters who are most biased against Elon were doing like super speculative short-term options trades, and so they're like, oh, like shareholders lost millions. I was like, well, no, because like stock is way up since then. So anyone who just like bought and held, it was fine. But yeah, if you had like a risky time-bound strategy, then sure, of course you were more apt to lose.
Yeah. And the reason he his motivation for sending the tweet is he wanted to give full transparency to all investors fairly because he got wind of a Financial Times story that might be publishing this, you know, and he wanted to like he didn't want investors to hear it from the Financial Times. He wanted to be the one to give the transparency to the public. So I understand, you know, his motivation for tweeting, and it's considering. He's not saying he is. He's saying he's considering. And, you know, sure, the 420 is a suspicious number, makes people, I think if it wasn't 420, if he said it's considering taking it at 400, I feel like maybe the lawsuit wouldn't even happen. I think just the fact that it was 420 makes people like pisses some like shorts off even more who lost money. Be like, we're going to screw Elon for this joke on us or whatever, you know? And if you look at his testimony, 420 is a coincidence. It happened to be exactly 20% above where the Tesla stock price was trading at the time. And that's kind of like the premium he was putting on to take it private, 20%, which seemed fair to him. And that makes sense to me. I mean, sure, like you look every day, there's going to be like 69 or 42 or whatever. Those numbers are going to show up all over the place if you're looking for them, right? It's like, you know, people think
just
that
look
like,
at the Twitter acquisition. I mean,
yeah. I mean, look at that. But still, it's just, you can look for any number you want if you have that number zeroed in as like a popular number. Like I used to look at number 44 for some reason. That was like my lucky number. And I used to see it all over the place. I'd be like, what 44 is haunting me? You know, you just notice it, you know?
Oh, it's 1244, Emmet. Oh my God.
Yeah. Yeah. So it's just kind of, it's frustrating to see this, but I think he'll be acquitted. I don't think the judge seems clearly biased as well. Like from his previous comments and from some of the interactions, it seems like he's saying, like ahead of Elon coming in this morning, saying like judge made some comment about like Elon's parking in one of my colleagues' spots this morning on his way in because he doesn't want to be photographed or something. And it was like, I guess it was like a slight delay in the courtroom starting. He like said some comment like that. And I'm like, man, who does this judge? Whatever, you know, he's like, Elon probably wants to park there for security reasons too, not because he doesn't want to be photographed, idiot. You know, he's like, a lot of people want to kill Elon, you know, like why can't he have good security measures? Like, why do you have to make it seem like
sure
he doesn't want to...
Elon's not actually like making the parking decision for his car too.
He's not even doing it.
Right. Like, I blame him, but like, I don't know.
I mean, that judge is, I mean, I'm going to look that judge up. I'm going to like troll him or something because that's terrible that judge is like this. I mean, San Francisco, okay, but still the judges are not supposed to be biased, you know, whether they're in San Francisco or Alabama, whatever, you know, like they shouldn't be biased, you know, that's just wrong. So, but the good thing is there's a jury, right? A group of regular people picked by the lawyers of both sides. So you think there's some sensible people that are not going to be biased and just see this for what it is, that Elon made some quote unquote questionable tweets. But although if you go to his mindset at the time, it's clearly normal, like you can clearly justify he did believe personally that he had funding secured and blah, blah, blah. So I think nothing's going to happen. It's just a pain in the butt for Elon to go through all this as usual. Anyway, that's my 2 cents on following the case closely.
It's kind of amazing how much time he's spending in courtrooms these days. You know,
Yeah.
part of that's probably unavoidable. I mean, when you get to a certain level of influence and wealth, like you're just going to have some of these suits that come up. But like I'd imagine it's got to be incredibly frustrating for him too, with all the stuff that he's got going on at Twitter, SpaceX, Tesla. Like he's got earnings calls tomorrow, and he's got like
Yeah.
the Giga Nevada opening with the
Tonight.
governor.
We'll
We
talk
didn't
about
even
that in a
talk
second.
about that. Yeah, and it's
Yeah.
like he's got all this stuff going on, and he's got to be stuck in a courthouse,
Yeah.
for days on end. It's just it's
One
got
thing
to
that
be
concerned
incredibly
me
painful.
just one more thing about the court case is in the beginning, one of the reporters that I'm following their tweet threads on it said that like at the very start, Elon was mentioning to like his person next to him or his lawyers that like he's uncomfortable, his back is hurting, he didn't sleep well last night. So I'm like I hope Elon's taking care of his health. I hope he's not like getting back problems and like not sleeping still again, like because those are not good things. Those things sometimes can get worse over time. If you're not sleeping well and if you start getting back pain issues, those can be very problematic. So I hope he's prioritizing his health. He seemed to be when I saw him at the Tesla annual meeting in the summer, he seemed to be, more fit, sleeping well. He had been tweeting about sleeping well and happier genuinely. I hope he's not kind of, not, I hope he's not taking care of himself and getting into more of a health rut again, like he has in the past on occasion, I feel like. So something to keep an eye on, I guess, is his personal health and well-being, with all this stuff going on.
Yeah.
And then, like you said, he's got all these things. Before we go into Tesla stuff, Twitter, I mean, Mr. Beast has his new updated profile or bio on Twitter. Have you seen that? It says like,
Yeah.
what are your thoughts on that? Do you think that's serious? I mean, what are the odds that you think he's been talking to? I mean, he must be talking to Elon already. I'm sure they have back channels, whether it's text messages, DMs, or they talk. I'm sure they talk privately, and they probably have broached the subject of doing something at Twitter, whether the CEO or not. Mr. Beast said, "I'd be CEO," right? So, what do you think
Mhm.
about this? What do you think about this
So
bio?
I think it's probably not legitimate, but you definitely cannot rule out the possibility that it is legitimate. I mean, we know that he raised his hand and said that, yeah, he would want to do this. So it's certainly a possibility. And he's clearly got, media savvy. He's been building up, what is it, like 5 or 6 different companies that he has right now? Did you listen to the Lex Friedman podcast interview with him maybe a week or
I
two
listened
ago?
to half of it. Yeah, I listened to half. I didn't listen to the second half of it. Yeah.
Like he's so young. You just think like, oh, he's, just it's very easy to kind of dismiss some of his success. But like when you hear him talk about the way that he handles his processes and the way that he's built up his teams, it's incredibly impressive, especially when you consider how young he is. Just
Mm-hmm.
the types of insights that he has. He clearly understands, social media and YouTube in particular way better than almost anybody else.
And he's
And he's got
clearly
some.
like one of the hardest working people around.
Yeah. Yeah. That's like I've watched a couple of his videos and I'm like, it's like I'm clearly not his target demo. It's a little bit I don't know. It's primarily geared towards younger people.
Yeah.
So I was kind of easy to dismiss him, but when you actually hear what he's doing and why he does things the way that he does, it's incredibly impressive. So I think it's possible. I mean, Elon did have that tweet to Lex Friedman that like whoever takes it over needs to pour in the vast majority of their personal net worth into it in order to have really significant skin in the game. So I could see Mr. Beast doing that. I mean,
Mm-hmm.
he's got a very meaningful net worth / fortune.
Mm-hmm.
So I think it's possible that he could be saying like, yeah, Elon, I'm actually serious.
Yeah.
But it's just strange the way that it came out just on the Twitter bio. Like, I don't
Yeah.
know.
Yeah. I mean, I think it's a good fit. I hope that it's true. I think, like you said, Mr. Beast, all the signs are there. I mean, he's 24 years old and he's like, look how successful he's gotten. Like #1 YouTube star, like, and he did it like by hand himself. He wasn't handed it to him. He had a mission and he made it happen. I really congratulate him for that. It's very impressive. He's got a very, very, very bright future of accomplishments ahead of him. If he doesn't, some people in their, when they get stardom, they ruin it through, drugs or just power, fame, whatever. It just corrupts them, right? But Mr. Beast doesn't seem to be going down that path at this moment. He seems to be very like genuine and just wants to make the best videos. He doesn't even like, he's doing lots of charitable stuff, he just seems to be a different type of person and than a regular, you know, person like me or I don't know. But he's got it. I think there's like Mr. Beast at 24 years old to become not only the number one YouTube star, but then to become the CEO of Twitter, which is owned by Elon and is going to be transformed into this like social media future of social media empire. You know, like he has the potential, I think, to become the biggest person outside of Elon, even bigger than Elon Musk. I mean, Elon at 24 was nowhere near as successful as Mr. Beast is right now, right? I mean, he's 24.
Yeah.
He's less than half the age of Elon. Imagine where he could go in another 20. He's really only been doing this stuff for like 4 or 5 years. You know, imagine another 20 or 30 years of him working hard to accomplish whatever his goals are. If his goal is to make Twitter the place for news, the place for content creation for everyone, you know, like I could see that happening. And Mr. Beast, he's got to be thinking like, hey, I achieved my goal of being number one YouTube, making the best videos. What's next for me? What's the next big challenge I can do? And if he's thinking like that, I could see him really wanting to be the CEO of Twitter. And this is exciting to me if this is true. I wish I was an investor in Twitter. You know, I wish.
Yeah. So he also it says, for those who haven't seen, in his Twitter profile, it says Twitter super official CEO, and that's all capitalized. And like I
Yeah.
could actually see Elon like using that as the official CEO title, like the super official
Yeah,
CEO.
I can see
Like,
Elon saying like, "This is your new title." You're not
it's
just like whatever, you know. Yeah,
I'll
go
be
on.
the chairman and president or something like that, but you'll be the super official CEO. Like that
Yeah.
just sounds like that sounds more like Elon than Mr. Beast
It
to me. I don't
does.
know. I could be reading into that too much, but like,
Techno
and
King.
also, if he wasn't, I could imagine that would really rub Elon the wrong way. That he would just be like making a joke that's getting
Yeah,
misinterpreted without
yeah,
Elon's buy-in. Like, and
I
I think
agree.
Jimmy is like
There's
smart
something
enough
to it.
to not do that. So
Yeah,
I don't know.
I think it's an Elon. You're right. It has the signature of an Elon Master of Coin type signature title.
Yeah.
He gave Mr. Beast, and Elon's preoccupied with this court case and other things, and Mr. Beast is like, I'm going to put it on my title and start working. You know, so I wonder if we get signs of Mr. Beast showing up at Twitter headquarters soon or something like that. You know, like that would be interesting. That would really be good signal to look for. Like, where is Mr. Beast physically located right now? Where in the world is Mr. Beast? Right? Because
Yeah.
we'll see. We'll see.
Yeah.
So, all right. So then the big piece of Tesla news, I would say, before we go into your model is, I say lots of good comments in the YouTube comments, by the way. I'll try to point them out when I see them. But the semi plant, Tesla, apparently the governor of Nevada leaked out yesterday in a speech that he's meeting with Elon in Sparks, Nevada, down the street from their factory there, to announce a new like 3.8 billion or 3.5, like practically a $4 billion investment to build a new plant for building semi trucks. Like that's not 400 million. That's 4 billion. That's a big number. That's like as big as the original Gigafactory in Nevada price tag. You know, this is going to be a massive plant at $4 billion. I mean, this is not a small piece of news to me. I mean, this is a big deal. What are your thoughts, Matt?
Yeah, I was very surprised by this. I mean, you know, we've been kind of speculating for a while that, you know, there could be a Tesla Nevada or a Tesla Mexico plant, or, you know, maybe even a UK plant or a Philippines plant. And it seemed like, you know, you want the subcompact to be made at some new facility and maybe increase Model Y output a little bit on top of that. So I was surprised that it was semi-related, and, you know, to be $3.5 billion, that is about as bullish of a signal as I think you can find for how serious they think the business opportunity is. I mean, it's been so long delayed. What was it first introduced in 2017 or something like that? 2018 maybe.
Yeah.
And, you know, they just delivered 30 or so, you know, in Q4. And so it's like, all right, well, you know, they're trying this thing and it's kind of cool. But no, like they're very serious about making this work. If they're going to invest $3.5 billion, I mean, that's more than, you know, 1 quarter's worth of CapEx, I think, on just for this one product line. So to have a dedicated facility like that, they must have some pretty significant order flow to be backing that up, I think. So yeah, I was surprised. What was your take?
I'm super excited and bullish. I mean, I think this just confirms Tesla's drive and dedication to make the Semi a big thing. I mean, how quickly can they get this plant up and running, I guess, is the key. I mean, the battery factory in Nevada, they did partnered with Panasonic on originally. What was that, like 2014, or I think they announced it or something. And
Yeah.
it's been like, it's still not fully to capacity, I don't think, yet. I mean, it's like 7 or 8,
Yeah.
9 years later. So I hope this isn't like a slow, but that's partly because they had to partner with Panasonic and it was a new thing. They must have learned lots of lessons. And JB Straubel, as great as he is in terms of battery chemistry, I'm not sure he's like the right person to be designing gigafactories. And I think he was put in charge of designing that gigafactory. He's more like a battery chemistry engineer, not like a factory builder, you know? So
Yeah,
I'm sure they've
and
learned a lot of
had
lessons.
trouble getting labor into that local market too, which has been a big
That's
issue,
true.
I think. So
Labor. Yeah. So they got to really ship in the labor from different, they got to get people to relocate there. You know, it's not an easy task, but I'm sure much of this will be automated. The amount of humans will be much less so than, you know, past factories, but still it's going to be thousands of people, employees, I'm sure. So, yeah, I mean, I just hope that, you know, everyone's going to get excited. All the Tesla bulls are probably going to get very excited, just like the mega packs and all that. My one concern is like, it could take years for this to really materialize. I mean, they need to be doing this. They need to put this investment in now to get it started. Yes, I'm happy they're doing that, but it could be, you know, 3 to 5 years before it's like built and ramping up like to, you know, 100,000 semis a year or whatever, 300,000 semis, however many semis they're intending to make. I'm guessing it's probably in the 100,000 plus range of semis if you're building that big of a factory. I'm just guessing, spitballing, but
yeah,
you know, it
I,
could
th- I
take
think wasn't
years.
their initial target like 50,000 or something like that per year? But they've been really quiet
Yeah.
on that ever since, which is a
Yeah.
lot. I mean, at $200,000 per semi, which seems to be the rumor that we've been hearing, that's about $10 billion a year of revenue
Yeah.
from this product. So,
Yeah.
I mean, it could be very substantial increase
Yeah. And I
into
see
the
Raymond
top line.
Chen in the comments says maybe Tom Shu will take over in the new factory. Yeah, that'd be great. I mean, Tom Shu seems like the perfect person to ramp up factories. He's done an incredible job in Shanghai. I mean, that's barring dealing with all the red tape and bureaucracy of Berlin or whatever else. But you'd think Nevada doesn't have much of that, and hopefully they could just get it ramped quickly once they build it. So yeah, exciting times. But let's move on to the main feature of today's call, which is the model, Matt, your model. If you want to pull that up for screen share, we'll talk through it on Twitter Spaces at the same time. I'll make sure that we talk about the numbers so that if you're not watching on YouTube, it's also being recorded on YouTube on our channel. But if you're not watching on YouTube, you'll be able to hopefully understand much of what he's talking about with his model for the Q4 earnings per share predictions. And Matt, just if you don't mind, sometime between now and tomorrow, you should publish your updated map, you know, the infographic you have of where your estimates were versus the
Oh yeah.
street versus actual, because Matt's been historically pretty accurate. I think last quarter a little off, but for the most part, you've been pretty spot on. So maybe after we do this at some point today, you can put that up there.
Yeah, I've got it on one of these tabs, but it's for
Don't
some
worry
reason
about it right
continuing
now.
to be a
Yeah.
bit slow. So yeah, I'll publish that. Yeah, I think last quarter was by far the biggest miss we've had since I've been doing this. Q4 2019, I think, was actually the first time I did it, and yeah, it's been very accurate historically, with pretty much just the one exception last quarter.
Yeah.
So I'll kind of walk through the changes. The way I like to think about this and to kind of explain it is, what are the changes from what was reported in Q3, or essentially what I'm calculating from Q3 to what I'm projecting from Q4. So I've gone back through the historical periods and tied out what my assumptions in the model should have been in order to match the results which Tesla actually posted. So starting with price here, the big change is I'm actually assuming a price increase from Q3 to Q4 for the Model 3 and the Model Y. It's almost $1,000. It's about $900. It is $900 of
So in
a price increase.
Q3, you had 53,763 is the average price for Model 3 and Y, right?
Yep. So in Q4 now, I'm showing 54,663. So that struck me as very strange, actually. So I want to walk through like what's the rationale for that. So we have this other kind of detailed buildup. I think we walked through this last quarter of kind of the profitability and ASP by plant. We're not going to walk through all this because it takes a lot of time and it's a lot of math. But essentially, you had price cuts most significantly in China, and then at the end of December, you had some extra price cuts in the US as well. So I kind of assumed a weighted average price cut for both of those markets, and so I was assuming that the ASP would decrease. But what the answers actually showed when I ran the math was that the higher weighting of or the higher mix shift of deliveries to Europe actually resulted in
from Shanghai,
but also in Berlin. In Q3, 15% of the deliveries were going to Europe. I'm estimating 24% of the deliveries went to Europe in Q4. So you've got a pretty significant mix shift to Q4, which apparently outweighs the ASP cuts in China and in the US.
One quick note is that 15 to 24% is not on the same number. It's on a higher number, right?
Yeah.
From Q3 to Q4 too. So deliveries in Q3 was what, like 340 or something, and then 405. Yeah. So it's not just 15% of 340 to 24% of 340. It's 15% of 340 to 24% of 405 going to Europe, right?
Yeah.
So it's a big change.
So the European cars obviously have a much higher ASP than the Chinese, and so that's what's driving that slight increase. So that was a bit of a surprise, but that's what's driving this assumption here. It's not just a ridiculously bullish assumption. So kind of going through here, just took the deliveries from the production and delivery report, plugged them in, nothing too exciting. I assume 30 semi deliveries. It really is rounding error. It doesn't move the needle at all, but that's why there's this slight disconnect between what was reported in the P&D report and what's shown here in this model. So there's a bit more math down here. I won't walk through every line, but I'm assuming a slight decrease in FSD take rate, just as you get, I think, the economy slowing a bit and a significant portion of sales in Europe and China, which have a lower take rate than the US. I'm just assuming. I think it's a reasonably safe assumption, or at least conservative assumption, to assume a slight decrease there. So in Q3, I assumed 7% take rate across the entire delivery total. I'm assuming that drops to 6% in Q4.
And that's just global, so it might be like 10 or 12% in the US, but like 3% in Europe, 1% in China or something like that. So averages to 7, right?
Exactly. Yep. So we've got a couple other small things which aren't too impactful here, but I'm calculating out acceleration boost, FSD subscriptions, and EAP. EAP is so enhanced autopilot. That's actually I think they introduced that right at the end of Q2, and so it hasn't really had a whole lot of time to make an impact on the financials, and they haven't really disclosed any information on take rate on that. But it's such a compelling offering. It wouldn't surprise me if the actual take rate on that is higher than what I've modeled here. Only 31,000 subscriptions overall, and then I'm assuming 49,000 FSD subscriptions overall. I mean, and keep in mind, these are kind of cumulative figures that should be growing over time, especially as the functionality improves. So it's just, when you think about the optionality of Tesla and having these like pure margin software upgrades that they can sell at any time, it's one of the reasons I get so excited about Tesla, because it could just be like one random quarter they disclose, oh yeah, like we had amazing margins because we have 400,000 FSD subscriptions or something crazy like that. Yeah. And it'd be like, okay, everyone's got to redo their models now because nobody was really taking into account any meaningful take rate on those. So anyways, I calculate the pure auto revenue, which is essentially just those ASPs times the deliveries. And then I'm calculating a take rate on FSD. And then here is another kind of big assumption for Q4. We know that the vast majority, well, not the vast majority, but historically around 50% of FSD take rate has been deferred. I think it's actually a little bit higher than that based on some numbers digging that I've done. So I've assumed it was 42% for the last many quarters of all FSD revenue is classified as deferred, which means that your deferred revenue liability on the balance sheet is actually, grows over time. But I think with what they shipped out in Q4, they're likely, in my mind, going to be able to qualify to recognize a good chunk of at least the US and Canadian full self-driving deferred revenue. So I'm assuming this percent of FSD revenue, which is classified as deferred, will drop from 42% to 25%.
And again, this is global, not just the US, because like Europe and Asia, it'll still be close to like 100% or something, but in US it might drop to like 10% or so. You're thinking, or
so they only have or they have around $2 billion of a deferred liability, deferred revenue liability, which is attributable to FSD. We don't know the exact number because they lump it in with all these other things like free supercharging and other things that are in that line. So you've got to kind of make some estimates. But I'm assuming about $1.9 billion of deferred FSD revenue at the end of Q3, and then with this big chunk of recognition for the U.S. market, I'm assuming that $800 million of that will be recognized in Q4. So that's going to be, I think, a headline number if this comes to pass in Q4, where a lot of people will be like, oh, like, I think it's going to be mostly a negative, to be honest with you, because it seems to be always the way it is. It's like, oh, like Tesla would be profitable if it wasn't for credits. I think you're going to have a similar sort of thing here. It's like, oh, they had $1 billion of credit and FSD revenue. And so like, they're like juicing their margin numbers or something like that. So
I could see that.
I think analysts will back it out, and that's probably the correct thing to do. But then you're going to have higher profitability going forward because you can recognize more of the revenue. So that's an important thing to keep in mind. Like if for example, and I don't mean to harp on this for so long, but if they could have fully recognized all this revenue all along, then they'd have an extra $2 billion of earnings over the past several years. So it's like, it's actually kind of artificially depressing their historical financials. So you can't both like ignore it historically and ignore it going forward. Like that just doesn't make any sense. So you've got to, if you're going to ignore it historically, then you've got to account for it going forward to be a more meaningful driver.
One thing to look at it going forward is, if it gets recognized fully at the point of sale going forward, as opposed to half of it being deferred or whatever, then that improves margins to a degree that might offset some significant amount of the price cuts, so maybe the gross margins, because of those two things happening to offset each other, won't be as drastic as people fear.
Yeah. Oh, absolutely. I mean, we try to model things conservatively. We're not showing the 2023 projections that we have in here right now. But we are using pretty conservative assumptions around that. But if it does actually start to move the other way and take rate starts increasing, then that can have an incredibly material impact on overall gross margins. So some of the other assumptions, I'm assuming $300 million of credit revenue, which is pretty in line with where they've been the last couple quarters. Q1 was kind of an anomaly. They were at 679 million, but after that it was 350 and then 286 million. So I think 300 seems like a reasonably safe bet. But again, it would not surprise me if this came in at 500 million or 700 or something like that. So trying to be conservative. We don't want to assume some huge EPS benefit from an anomalously high credit number. So anyways, adding all that together and then adding in the lease revenue, which I've calculated separately, you get to total automotive revenue of $23 billion. And then adding in energy and services. So energy in particular, I'm assuming is going to grow pretty substantially. I'm assuming $500 million of incremental energy revenue, just related to the ramp of Megapacks. So there's been a lot of deployments that you guys like Zero Sum Game and others have been bringing attention to this. And so I'm assuming that will start to ramp, although it's still going to be well below the kind of 10 gigawatt hour quarterly run rate that the Tesla is theoretically capable of. So that's driving the kind of significant quarter over quarter top line increase there. So putting that together, the core manufacturing margin. So this is another assumption that's really integral to the way that I do this model. So essentially what I'm trying to do on this other tab over here that we're not going to go into is not only building up the ASP by region, but also building up the cost of goods sold by region and by delivery. So both where is the vehicle manufactured, and then to which market is it selling? We know Martin has said that the Model Y is made in Europe, made in China. And shipped to Europe are the highest margin. So we've done a lot of kind of back calculations and estimating of how the different cost of goods sold will build up, and then how the ASPs trend and kind of checking those against historical financial reports and making assumptions that tie out. to those. So when we went through that exercise for this quarter, we showed that you had a roughly 1% increase in the core manufacturing margin. And that is aided a little bit. I think about half the increase is just with a foreign currency effect. So we were coming up with a range. If you completely excluded foreign currency, we were looking at about 0.5% of improved core manufacturing margin. The foreign currency benefit that we calculated was around 1% gross margin benefit. So we kind of just took half the assumed or half the calculated benefit and assumed 0.5% from kind of mix shift and continued efficiencies, and then 0.5% from currency translation. So putting those together, you get a 1% quarter over quarter improvement to 25.2. So then that gets you to the kind of core manufacturing gross margin. Then you add in the full self-driving and other, acceleration boosts and all those, and then the credits to get to $7 billion, almost $7.1 billion of auto gross margin. Now, keep in mind, 800 million of that is the assumption around deferred revenue recognition, and that gets to automotive gross margin of 30.7%. But again, this is significantly elevated due to the deferred FSD revenue recognition.
Without that 800 million. Without that 800 million, then the automotive gross margin might have been closer to in line with last quarter or even less, right?
Yeah, so let's just check that here. So it'd be 28.1. 28.1.
Okay, so
it'd be a modest increase quarter over quarter.
Yeah, just barely above it. Okay. So it'll look juiced because of the $800 million deferred revenue.
Yeah, it's like a 3% benefit there.
Yeah.
So then on energy gross margin, I'm assuming that's going to increase again. So in Q2, it was 11.2%. It dropped in Q3 to 9.3%, which was a little surprising. It looked like they had some pricing issues with their stationary storage. But I'm assuming with a little bit of a higher scale and potentially some higher priced megapack contracts being realized in Q4, that this would increase just marginally from 9.3% to 12%. So that gets to $227 million of energy gross margin. So this is a somewhat meaningful. It's creeping up. I mean, that's not going to move the needle for the quarter very much, but it's the sort of thing that would catch people's notice. If you had gross margins from energy essentially double quarter over quarter, that would definitely catch some attention. So this is something I could definitely be wrong either way on this assumption. I think it could be higher or lower than this. But it does make sense that this is going to start to be a little bit more material.
What quarter do you think they'll have over $1 billion in energy gross profit? Do you think it'll be this year sometime, 2023 sometime?
Well, it's
all the ramp of the megapack. Just if you just spitball, what do you think? I think you think it'll be Q4 next year sometime.
Do 10. I'm just going to do the quick mental math. So if they're Q4 next year, let's just assume they're at 10 gigawatt hours, which is the quarterly capacity of Lathrop. So if they get to 10 at $500 per kilowatt hour, that'd be $5 billion of revenue. So at a 25% gross margin, they'd be just over $1 billion. So yeah, I think Q4-ish. Some of it depends on deferred revenue or revenue recognition. Sorry, not deferred revenue. But I think Q4-ish seems like a decent time where they could be pretty close to $1 billion of gross margin.
That'll be fascinating. I think that'll be really get people's eye when that starts happening. I think.
Yeah, I mean that's a 10x from where we were just last quarter. So I mean this is where it gets hard because you don't have a whole lot of history to rely on. But the math, like when you start doing the actual work of making these assumptions and trying to make them reasonable. And not just super optimistic. I think even then you're getting numbers just that you need to that would make Wall Street take notice. Yeah, I know you're a little bit more pessimistic on that than I am, but I mean, what do you think? Does $1 billion a year from now sound too crazy to you?
Yeah, it does. I'd say 2 years from now. 2 years from now is where my conservative guess. Maybe 18 months is like my 50-50 mark. Yeah,
and I could see that. I mean, that wouldn't. I think. That certainly could be the case. So and I don't want to.
But still, I mean, that's great. But Tesla, it's $1 trillion market cap valuation. It's got to get back to that. You'd think around that time or by then, and you got to get to the $1 billion plus of gross profit on this new kind of business, on the energy business, to really, I think, take notice on a $1 trillion market cap company. Like if it's a $200 billion market cap company, oh, that's huge, right? But for a $1 trillion market cap company, you got to have an extra zero or two to make it really substantial for the valuation, in my opinion.
Yeah. Or more than one product line. I mean, this is
Yeah.
almost everybody still just views Tesla as an automotive company. And so if they say,
Yep.
hey, you know what, they've actually got this really
Yeah.
meaningful, growing and profitable business line, which has a backlog of many years and they're ramping capacity.
Yeah.
So we got to do that work and model it now. And then, oh shoot,
Yeah.
yeah, it looks like it's going to be $1 of earnings per share. So we need to apply a multiple on that. And so then that gets you to a more significant valuation. So yeah, I agree with you. It's I think this can really boost the kind of long-term growth prospects, and it also diversifies the revenue streams, which is helpful in a recession.
Yeah.
All right, so I'll kind of zoom down the rest of this. It's less impactful assumptions going forward, but you can see the total gross margin. So energy, services. Oh, actually, sorry, I skipped services. So services margin, I actually dropped down to 0. So historically, this has been negative. But the last couple quarters, it's been positive around 4%. And the reason for that, I believe, we talked about this for the last couple quarters, is that Tesla was getting the Model 3 leases from 2019 off lease, and they had the right to sell those. So with used vehicle prices being as high as they were earlier this year, or earlier in 2022, Tesla was seeing a pretty significant gain on those vehicles. We believe, anyways. They don't disclose the details around that, but they've got all these an increasing number of Model 3s coming off of lease every quarter as we get kind of like 2019 Q2, I think was the first time they had this. And then, so you could remember that ramp. So then in 2019 Q3, they had even more vehicles delivered and going on lease, and same thing in Q4 of 2019. So you're going to have more and more of these Model 3s coming off lease, but the used car prices have been hit pretty hard. So I'm assuming that the kind of benefit that we have been seeing for the last 2 quarters of the leases gets reversed away a bit in Q4. So I assumed essentially that this whole margin line is break even for services, and this assumes more than just used car sales. There's
and it's sort of de minimis anyway, right? Whether it's 0 or 5%, it's like less than $10 million for the bottom line, sort of de minimis, right?
Yeah, I mean, if they doubled quarter over quarter their gross margin and got to 8%, it's 150 million. So that's like kind of nice.
Okay, yeah, that is
it's kind of nice,
really nice. Yeah,
but like even then, it's like rounding error of the automotive gross margin. So
yeah.
This could move either way, I think, but I think it's reasonable to assume declining prices lowers the overall profitability of that part of our business.
Okay.
So then I'm assuming just modest growth in these operating costs. I don't want to walk through those, and then some slight changes on, or not slight changes. There's all this kind of below the line stuff, which is not super impactful. But essentially, we're getting to $5 billion of net income, or $1.45 of GAAP earnings per share.
Scroll down a little further because our pictures are in the way. Okay, there we go. Yeah.
Yep. So $1.45 of GAAP earnings per share. But remember, Wall Street is absolutely going to back out the deferred revenue. And this is something that's a little bit interesting. So I backed out that deferred FSD revenue recognition in Q4. So the kind of reported non-GAAP adjusted earnings per share figure that I'm calculating here is $1.34. The street right now is at $1.10. So this is a somewhat sizable beat. It's not like a massive blowout we're projecting here or anything like that. But I think this would certainly be good news if Tesla was able to deliver results like this. Yeah. But I'm kind of curious to see what Tesla does if they actually do recognize this revenue, because they have recognized chunks of like $60 million or $80 million of deferred revenue along the way. I think 2021 was the last time they recognized some of that, and they did not back it out of adjusted earnings per share. So yeah. I wonder if they recognize $800 million, would they also not adjust it out? I'm not sure, but I know Wall Street would, even if Tesla reports it. So Tesla may actually report like $1.45 of GAAP and then just back out the stock-based compensation. And so that they could report
the stock-based compensation is like the stock-based compensation is 10 cents the other way, and then the deferred revenue is like 21 cents. So that's why you have a net 11 cents or something, right?
Exactly.
Credit. So it goes down to $1.34. Okay.
Yep. Yep. So, but like if Tesla just stuck to the way that they used to do it when the deferred revenue was a smaller amount, they could actually report adjusted earnings per share of $1.55 if all they
Mm,
do is add back the stock-based comp. But my
yeah.
point is, Wall Street will adjust the adjusted earnings per share, and so the real important numbers is like $1.34. So that's kind
Mhm.
of what I'm looking for. If they've got some like ridiculously high adjusted EPS, and that's the first thing I noticed. Like my first the first place I'm going to go is, all right, did they back out deferred revenue recognition?
Mhm.
So a little bit of kind of
$1.34.
finance
Okay.
nerdy stuff, but $1.34, yeah, that's what I'm assuming here.
Okay. Cool. Well, we'll that's great info. We'll see what happens tomorrow when they report earnings. If they do report, I think the street's expecting $1.11 or something according to the
$1.10 was the last thing I saw. Yeah, so
yeah. So $1.34 would be a really nice beat. But the key, I think the market's going to want to know about the guidance going forward with margins and such. And so yeah, I mean that would be a big beat. Tesla's been beating most of the time, but the last few quarters has not gone up from it. It's gone down because the macro market's been going the wrong way. Maybe the macro market has turned around and can use this as an excuse to help really boost Tesla's stock price again if the macro market is in fact favoring growth stocks again or starting to favor them. Maybe we'll see. We talked about the beginning of the stream, the macro market and where it could or could not go from here. But maybe we should open up to questions. Anything else you want to say before we open it and get like 15 or 20 minutes of
no,
questions?
let's just open it up so we can get through a couple of them.
Yeah. First question from Bob Adams 1414 on Twitter. Do you think Texas Giga gross margins will surpass Fremont by the third quarter of 2023? That's a very interesting question. I think that that's about when the Cybertruck's going to start go. It's going to, if you take out the Cybertruck and the ramp, and maybe it could be a few quarters of a ramp for the Cybertruck. If you try to compartmentalize that out of the equation, I do think Texas Giga gross margins could surpass by third or fourth quarter 2023, just for the Model 3 or the Model Y, because they have the more advanced manufacturing methods and just a much more. I think Fremont has been like maximum efficiency for a while now. It's like very slow, very modest improvements in its efficiencies the last like year. Maybe Tom Shu is like doing new stuff. I don't know, but it seems like building that gigafactory from scratch in Texas, lower cost of labor, more advanced manufacturing methods, just the footprint. I feel like they could beat the gross margins of Fremont by the end of the year. What do you think, Matt?
Yeah, I think when you put it all together, they probably won't. And I think a big part of the question is, where's the 4680 ramp by there, and also where's just the overall ramp. But I mean, I could imagine the Model Ys, I'm pretty sure would be more profitable than the Fremont Model Ys by then.
Yeah.
But when you take into account, Cybertruck just starting up, then like that's going to be a negative hit to gross margin at that plant. So that would be my kind of high level answer. Is I think Model Y gross margins will be higher than that, but I think the Cybertruck will pull down the overall Giga Texas gross margin to be below the Fremont.
Yeah. Next question from Tesla Uber Ride on Twitter. Do you think the consumer tax credit is overhyped given how few taxpayers pay enough tax to receive any benefit, especially as Tesla expands into the lower cost market? Yeah, I mean, I think you have to pay over $7,500 in federal taxes to actually get the full tax credit. So that would, imply someone making, I don't know, close to six figures in taxable income, I would think, or less than that to pay. I forget the exact tax brackets and how it ladders up. But I think the majority of Tesla buyer people in the market for a $40,000 and up car are probably going to benefit. It might not be 90%, but my guess is, I haven't done analysis. My guess is like 60 to 65%, or 2/3 of at least of the buyers, would benefit. So yeah, I don't. Yeah, what do you think, Matt? Have you thought about this one at all?
Yeah. So I usually think of it from the other way: is how many of the buyers make too much money to qualify for the tax payments.
Oh,
But
that's true too.
this is coming from the other side of don't couldn't actually realize the tax benefit. My thought is if you aren't paying $7,500 in net taxes, you're probably not going to buy a Tesla anyways. I mean, I haven't done the math on exactly what you'd have to be earning, but it seems like most people are paying at least that much in federal tax, where most people, I should say, who would be considering buying a Tesla are probably making at least that much. So yeah, I think about it the other way around personally, but I think it's a benefit.
Yeah. Tesla SpaceX fan on Twitter: with a fleet of over 100,000 Tesla vehicles, doesn't Hertz stock seem to be a screaming buy? Once Tesla robotaxi is approved, Hertz earning potential will blast off. I've been thinking about this a lot lately with the news coming out of Hertz partnering with Uber to let Uber drivers drive the full self-driving Tesla, and the energy efficiency.
It's not the full self-driving, is it? Or did I miss that part of the announcement?
FSD beta.
Oh, really?
Heard Uber
I didn't know
drivers
that.
are using FSD beta more and more, I think, that are using Teslas, that are using FSD beta. Maybe the subscription plan, or maybe it's bought as part of it. But I've heard a lot more anecdotal stories of Uber drivers just using FSD beta to drive their passengers around. Their passengers don't even know and get surprised to know that like their driver's using it or something. I feel like that's a trend that's going to grow, I guess. I'm not sure it's like really big right now, but I feel like it's an obvious trend for Hertz with Uber and the technology to kind of have that kind of domino effect. And Hertz is I've been thinking more and more about Hertz, like just being an owner of a ton of these robo taxis, and what an asset value increase those will be once the FSD beta becomes more FSD, or full self-driving, and we keep saying it's around the corner. Is it going to be 2023 or 2024 or 2025? I don't know. But sooner or later, the army of cars, robots Hertz has at its fingertips, I would think should warrant a higher valuation. Isn't it like a third of their cars are Teslas by the end of this deal or something like that?
Yeah, it's somewhere. I think with the initial 100,000, I think it was like a quarter of their fleet, and so yeah, now it'll be closer to a third, I think.
They'll probably just up it because it's less. The reports are Hertz is finding it less costly to keep the cars running and work on. They're just finding it more profitable, right? That's
yeah. Well, and I'd imagine people are flocking to them. I mean, I was in San Francisco last week and had to rent a car, so I chose Hertz. I wouldn't normally choose Hertz, but I did because I wanted a Model 3, so I used that. And but they don't. I'm not sure it's an autonomy play. I think they're probably going to set themselves apart from their other peers, but they haven't bought FSD, which I was reminded of when I navigated to a location.
When you rented it from them.
When I rented it, yeah, and I was expecting it to navigate on autopilot. I just wasn't paying attention, and I drove 11 miles past my interchange before I noticed that I was going the wrong way.
Oh man!
So no, I think Hertz is potentially a really good buy, but I think if they had actually bought FSD or had some sort of special deal to like lock in a call option on FSD at a lower price, then I'd be like way more optimistic. But I think by the time Tesla actually solves it, they're going to charge Hertz just as much to upgrade, I think, as everybody else, or maybe close to that amount. So to me, it's not a pure play kind of autonomy pure play autonomy investment, but I do
Hertz
think
might
that
have
potentially some upside.
Yeah, I mean, Hertz might just suddenly say, "Hey, we'll have half of our cars sign up for the subscription package because we know that half of our renters want to pay the extra premium for full self-driving. So if we have so that it could play out that way or something too. We'll see."
Yeah.
Let's go to Hoops How on Twitter. In a recent Twitter Spaces, Elon talked on sacrificing profits to grow demand in this macro environment. Shortly after, Tesla cut vehicle prices. Could you see further price cuts this year? Well, there was actually just a $500 price increase in the Model Y, probably because demand, they overshot the price cut on Tesla Model Y a little bit, and demand was just getting really high, and it felt like let's just increase it a little bit just to because they can, and it's still under the $55,000 credit, needed price cap for the credit. So, I would be disappointed if Tesla cut prices again. Personally, I would be very disappointed. I would think that they should try some kind of like educational advertising. I hate that word advertising, and I think Elon probably hates it too, but maybe they call it, like in China, Tesla China, they called it customer relations, they called it marketing or whatever. So if they just did something like where they put out a couple of educational, 30-second or 1-minute spots on, traditional TV, whether it's Super Bowl or some other big sporting event games, people watch on live traditional TV a lot of times, then I think that would go a long way. Just some traditional, like, hey, Tesla's the safest car by far. Look, people drive off a cliff and survive. Look, the autopilot saving people and animals. And, then they could say, look, just plug in at home when you get home every night, like your cell phone. You don't need to go to charging places. It's simple as that. Never have to go to a gas station. Just some basic things. Then I think it would do a ton for like probably 60 or 70% of America that has really very uninformed on Tesla. What do you think, man?
Oh, you think you're smarter than Elon? Tesla sells every car they make. What are you talking about, Emmet?
Yeah, I've heard that so much.
I know. Yeah, you and I both been hit with that a little bit lately. But no, I agree with you, and I think Tesla has been. You've seen them starting to do that on Twitter a little bit, but and that's been one of the rebuttals of some of these people who think advertising is just a waste of time or effort, or that Elon knows best. Is look at what they can like advertise for free on Twitter essentially. But like, I don't think you necessarily need to convince most of the people who are seeing like the Tesla account on Twitter of the benefits of a Tesla. Like if you're already following Tesla on Twitter, you're probably a buyer, or at least are considering it already. I think where they really need education is in like the mass market area, people who just don't understand that like you just can charge at home and it's actually a better ownership experience, and that Teslas are the safest cars. Like these basic things that you're just talking about. The
most common questions we get from people outside the box. Yeah.
Exactly. Yeah. I mean, my electrician who installed my home charger asked if I put gas in in my Tesla, and I was like, "How do you, of all people, not know this?"
Yeah.
Like,
it's dumbfounding that so many people, like, you just have to realize, like, other people are very, like, everyone who's watching this, who's watching me and you talk about this, or sees us tweet about it or whatever, everyone who's doing that, please put yourself outside of our mindset in our Twitterverse tunnel vision. Outside our mindset, there's people out there, lots of people out there that really have no freaking clue what Tesla cars value proposition are. They're totally misguided by the hate stream media, so you just have to really be humble enough to realize most people are not thinking like us. Most people are thinking in a very different mindset, different worldview of Tesla. And if you can appreciate that and understand that, I think you can get that some type of traditional advertising to reach those people could be hugely beneficial to Tesla.
Yeah. Or just try it out. Like, why not just invest $10 million, try it out and see what the results are? I mean, that's really all I want. If it is a waste of money and time, great, let's not do it. But at this stage of Tesla's growth, it just makes sense to me. So I also hope we don't have further price cuts. But I think, getting back to this particular question, I think it just depends on macro. I mean, if we slide into a pretty significant recession, they may very well have to do further price cuts. That's not my base case. I don't think they will. I think the cuts are kind of good to secure the capacity that they have and are planning to bring online this year. But we'll see.
Yeah. Let's cap the price cuts at where they're at. We don't want to lower them anymore. All right. I think, that's what we're saying, basically. Yeah. Next question. Let's see here. From Bruce Burnsworth on Twitter, B. Burnworth. How you doing, Bruce? I recognize the Twitter handle. Another guy who had an incredible Tesla options ride. When will we see another gamma? I think that's the same Bruce Burns. When will we see another gamma squeeze and short burn accelerate the rise of Tesla stock? I mean, I think those days might be over, to be honest. I think Tesla is so big and so liquid at this point that and so many of the call option buyers are wiped out the last year or so that that I think Tesla could still have a great significant rise and go from, like, it could go up 200% in a year maybe. But I don't think it's going to be because of a gamma squeeze or a short burn anymore. I think it would be because institutional investors are all coming on board kind of in droves and saying, oh, we got to own some Tesla. The problems with Elon are out. The gross margins are good. It's the only car company in town going forward. We got to own some. And it could just be like a bunch of institutions buying, sort of like what happened with Apple, there's a few years there I remember, and this is before like call options were a huge thing, and Apple would just go up like 200% in 1 year, and this was like 10 years ago, soon after the iPhone and stuff. So I feel like there could be just like this mass awareness of institutional investors kind of all like deciding to get a piece of Tesla more frequently than they are now, and that could drive the next kind of big leg up in Tesla, but not a gamma squeeze or short burn again. What do you think, Matt?
Yeah, I was actually thinking the same thing before you answered. I mean, we're not in the days anymore where you've got 30% short interest and like millions of, or, well, we do have millions of dollars of call options, but how, I don't know what the stats on, like the delta dollar exposure and like the gamma squeeze that we saw in 2020. I don't think we have that level of kind of open interest that we had back in 2020, 2021. So yeah, to me, it's unlikely that this would be anything close to the, like 10 to 15x return that we saw. I mean, Tesla could double or triple or something like that in a year, and that'd be like a fantastic run. But I don't think it'd be the same sort of dynamics of the gamma squeeze that we saw kind of on the way up and the way down, frankly. I think volatility
Yeah.
is going to be a bit lower going forward.
Yeah. I mean, when you have you got to like, I always, when I think about stocks, especially when I think about Tesla, I always have to frame it in my mind first above everything else. What's the relative size of this company? And Tesla's in the hundreds of billion-dollar market cap right now, almost $1 trillion. It was $1 trillion market cap not long ago, and we'll get back there. I think I'm very confident in a matter of time. So that's like just this massive company, and like if it was a 10 or 20 billion dollar market cap, yeah, okay, gamma squeeze is on the table, short squeeze on the table for sure, I think. But when you're a company that's a market cap that's so big, then it's really hard, in my opinion, to have a gamma squeeze really push that stock up a significant leg. I mean, it would have to be like, you'd have to have like, what was the guy from Japan running that big fund that was buying call options, the
Oh
whale,
yeah.
the SoftBank
Yeah.
guy.
SoftBank.
Yeah,
Yeah. Yeah.
like 2 summers ago or something, he was found out to be buying tons of like call option. Word would get out quickly if there was some big whales buying tons of call options like that again in Tesla and other stocks. I think word would get out. So, aside from some retail people buying call options getting burned a lot of times because Tesla's going down or maybe doing well with lottery, different things, you'd see the writing on the wall if there was a potential for a gamma squeeze, because you'd hear about these like massive purchases of call options, and some of these big players, probably what they do is they make a special deal directly with the counterparty, JP Morgan or Morgan Stanley or whatever their investment bank is, and do it, over the counter versus on the exchange. And so, yeah, we'd probably hear some wind of some of those deals if there was some massive, call option bets or like that. That's my thought. So,
Yeah. Yeah,
all
Brian
right.
in
So
the
let's,
comments says Masayoshi-san, I guess was his name.
yes,
That's his
yes,
name.
yes, that's right. I remember him. So let's do one more question. It's been an hour and 40 minutes almost. So from Andrew Bazile, how you doing, Andrew? Question: how soon before Tesla takes reservations on a cheaper car is this needed for continued fast growth? I think they'll take reservations on the Tesla bot before a cheaper car.
Ooh, that's a spicy take. Okay.
That's a spicy take. Yeah, I think either this coming AI day or the AI day after, they'll start taking they'll show a more defined prototype and start taking reservations from like businesses, probably maybe retail investors too, like us. But I could see that happening. I think the cheaper car, I'm not sure they're going to take reservations right off the bat. I think I think they'll just, because it would just be too crazy. Like you saw how crazy it was the Model 3 or even the Cybertruck. I mean, if they start taking reservations of the cheaper car, which they're entirely confident, it's not a new category like the Tesla bot is. Like I think that's a different kind of animal to take reservations on early, just to kind of see how serious people really are about it, But the cheaper car, I think they already can assume that there's going to be like 10 million plus reservations in the first day of opening that. So I don't think they will until they actually until they're like very close to production, maybe, or they'll have some way. I don't know. Would you think they're going to open? Maybe I'm wrong. I just feel like they're going to
Yeah,
do something different with the cheaper
I
car.
agree. Remember how much they downplayed the Model Y, which is now on track to be the best-selling car in the world? Like, I watched
Yeah.
that Model Y event, and it was like the most boring, disappointing, non-Tesla kind of thing. But Elon
Yeah.
essentially said it was to avoid Osborning the Model 3 when the Y was still many years away, or at least a year
Yeah.
away from being produced. So yeah, like I think it's just going to be one of those things that they develop it for a long time, and they'll only unveil it when it's like really close to being produced. So,
Yeah.
I mean, like, but we've got stuff right on the horizon. I mean, Cybertruck with its what is it, 1 million reservations that they have or deposits or
Yeah.
something like that. Now, not all of
Yeah.
those are going to come through, obviously, but
Yeah.
that's going to completely change the growth dynamics. I mean, it's a brand new segment that they haven't been in yet. So that's
Yeah.
going to be a catalyst for 2024 primarily. And that'll ramp for a while, I think, and continue to sustain growth. And then the semi truck, apparently, with this huge, $10 billion in sales potential with this new factory, that's going to be a pretty meaningful catalyst as well for continued growth. And then, yeah, at some point, like by the time those have dried up, we're at 2025, and maybe autonomy is actually more legitimate by then. So then that's like a whole game changing catalyst. And then at that point, Tesla bot. So, I mean, it's just thinking of how long it takes to actually develop and ramp these things. I kind of don't think that we're, I think the things that they've already announced that are getting close to production are going to be the catalyst in the next couple of years, and not necessarily like a $25,000 or $30,000 vehicle.
Yeah. Cybertruck, you said it. The Cybertruck is going to be, you know, billboard driving everywhere it goes for the first several months. They get produced into the wild, like that'll
I'm
really
so
wake
excited for
people up.
that. Yeah.
Yeah, that'll really wake you up because you already have a little, a little curiosity. Like I saw it with the Falcon Wing doors or the Model X. People would ask about it, like, "Oh, what's that?" I was one of the first people with the Model X. I remember, and it really opened up eyes and made conversation. But that's not as wild to look at as the Cybertruck. The Cybertruck is just something very different, something out of a science fiction animated movie. It's not like in real life, and it's gonna be driving all over the place. It's gonna be picking kids up. So everyone's gonna be talking about it. Did you see that Cybertruck? Did you see that Cybertruck in town? There's somewhere in town. Let's go find it. People are gonna like want to cite it on Instagram or Snapchat or whatever and go find
Yeah.
it. It's gonna be the rage. Everyone's gonna talk about it. It's gonna be like for at least a few weeks, probably a few months. It's gonna be such a huge marketing um gimmick, not a gimmick, but a huge marketing force for Tesla.
Yeah.
These semantics are so funny. Like you can say gimmick or force. I mean, they're essentially same, but they have two different slants. So semantics define so many things, like the word advertising, for example, that Elon thinks of as bad. But it could be just informing the public. But before the Cybertruck, if they have to do a price cut, they should do some kind of informational advertising, we think. But I think the Cybertruck will shore up interest in Tesla. You see lots of Google searches on Tesla, Google Trends, and Tesla and Cybertruck and everything Tesla related, I bet, right after the Cybertruck's unveiled. So that's my thought. Once we get there, it's going to be, demand will be secured for all their products for a while, I think. So exciting times. One joke for you, Matt, to end things. What do you call, my last name is Peppers. What do you call a nosy pepper? Or what does a nosy pepper do?
What is it? A nosy
Anyone in the
pepper.
comments, say, we'll give you a second or two in the comments here. What does a nosy pepper do? Nosy pepper.
I don't know, I'm thinking like Snoop, Spice. I don't have anything that
You're
makes
on the
any
right
sense.
track.
All right.
Someone said sneeze. Robert Hirsch said sneeze. It makes you sneeze, maybe. I don't know. It's jalapeno business.
Oh, that's a solid dad joke, but worthy of a
Yeah,
groan.
I heard it this morning. It made me laugh, and it's my last name, so I had to remember it and tell it.
Jalapeno business.
I'll have a better joke next week. All right, guys. Thanks for coming on, and we'll be here same time, same place next week. Any other YouTubers watching this? Feel free to reach out to Matt and I if they have questions about how to do it on Spaces and YouTube at the same time. I think it helps Twitter Spaces grow to be able to do this on both at the same time, and you get a bigger audience. Why not? It's, double, two birds with one stone. Everyone wins. All right, guys.